Hello students, today we will discuss a previous year question that came in the Business Studies exam held by the Assam Higher Secondary Education Council. The question that we have is, what do you mean by business finance? What do we mean by business finance? We will here understand the concept of business finance. So we can understand it by the definition first. Here it is said that business finance refers to the money required for carrying out business activities. It includes the funds needed for starting, running and expanding a business. It covers both short-term and long-term financial needs. And the sources of business finance are owner's capital, loans, shares and debentures. So what is business finance? It is basically the money needed by the business to carry out its activities. So every business has various kind of activities. It can buy goods and it sells goods, or it can provide services as well. So to provide services or to provide goods to the customers, there are everyday activities. And to carry out those activities, a business needs money. So that concept we call is business finance. So again, why does a business need money? To start business, to keep it running and to expand, to make it grow. And for what needs? For short-term and long-term financial needs. So short-term financial needs can be everyday activities like basic activities like providing salaries to employees, payment of rent. These are the short-term financial needs. However, there are certain long-term financial needs like expanding the business, buying machinery, buying land in future. These are the long-term financial needs of a business. So for both these two, business finance is required. And the sources of business finance, we can actually divide it into owner's fund and borrowed fund. In owner's fund, we will have retained earnings or reserves that are made from the profit of the business. So that also becomes a source of business finance. So in owner's fund, we will have retained earnings. Under that, we will have reserves made from the profit. And from borrowed funds, we will have all kinds of loans, shares and debentures. Loans, shares and debentures. Or sometimes those loans can be from single individuals also. Now we will understand the scope of business finance, or why is business finance important or necessary. So why is this necessary? First, to start a business. And to start a business, for example, to buy land or building or any kind of equipment or licenses, money is needed. So that is why to start a business, finance is required. Funds are required. The next scope or the next point here we can understand is running operations, like day-to-day expenses. Just like I said, payment of salaries or rent or any kind of buying utility or inventory. These are the running operations of a business, and to cover these expenses, finance is needed. The next scope or the next point we have is expansion. To expand a business, after the business have made certain kind of profits, its next goal will always be to expand it. So even for that expansion, funds are needed. So here example is investment in new products, markets and locations. For these kind of activities also, a business needs finance. The next point we have is fixed capital needs. What are fixed capital? We can say buying land, machinery, all these are fixed capitals. So to buy, and these are long-term assets as well. So to buy any kind of machinery, infrastructure or vehicle, money is needed. So fixed capital needs are also covered by business finance. And the last point we have is working capital needs. What are working capital needs? Again, these are the day-to-day expenses of a business. Those are also the short-term needs of a business, like payment of salaries and wages, bills and buying raw materials. That comes under working capital needs, and which are also needed for business finance, or business finance is need to carry out these activities.